Let's take a look at how we're opening up in our grain and livestock market activity and see how they're holding up. On the corn, if you recall, we were kind of lower by a penny or two overnight and then opened up higher, and they were kind of led higher by the soybeans the way it appeared. Well, they're still higher. We have March corn still up 9 cents at 509.5. Remember, overnight they got as low as 492.5. December new crop corn 4.5 higher at 434 3/4 per bushel. On the soybean trade, with our quotes provided by bar chart, you know, soybeans are just hanging right in there. Look at this. March now at 13.36 per bushel. That's 24 1/4 higher. We're within about 3 cents of our high of the day so far. And that's after they dipped down below $13 overnight. They got as low as $12.98 last night. And now we're already back up to 13.36 1/4. Big turnaround taking place here in the soybeans. September is now up 14 cents. Not keeping up with the gains in the nearbys, but still pretty strong anyway. Now in Chicago wheat, March is 6 3/4 higher. We're at 641 1/4. The new crop July contract is up by 4 cents. On the Kansas City market, we have March 6 higher now at 619 1/4. So that would be about 14 cents off of our low that was posted overnight. On the spring wheat trade right now, you have March up 6 3/4. We're at 619 1/4 per bushel. The July is up 7 cents. On the cotton, March at it again. It's up 83 points at 82.39 cents per pound. Big moves across the entire grain complex this morning. Let's go ahead and bring in Chris Swift of Swift Trading Incorporated. He's based in Nashville, and he joins us right now. Chris, big moves. What are you looking at here first?
Well, you know, I look at the corn market and the bean market right off the bat because clearly this is a reversal of a reversal that we saw towards the end of the week. But the selling from last week seemed to be very abrupt, probably some profit taking in there more than anything. And the best thing that I can tell you is that none of the underlying fundamentals that took us higher to begin with have subsided any. So I think we saw last week some big sales to China. The market just needed a little profit taking breather, and right back again this Monday morning, we're headed right back up again.
So from what I understand, the moisture that was received in South American growing regions, it is still running behind normal, and it's causing a little bit of concern, even though harvest is already starting now.
Yeah, and it was sparse over the weekend. They were looking for some good rains, and, you know, it can still impact the yield just a little bit, but what you don't want now in that harvest is to start getting really muddy. So it would be that much harder to get the crop out of the ground then. So I think right now you kind of need a little bit of dry weather for that crop that's finishing up its maturity.
And just to touch on the dollar value, now it's up 243 points this morning on the March futures index. So now we're quoted at 90.465. It just changed. So a little strength in the U.S. dollar, and still the grains are higher anyway. That's kind of interesting. We'll come back in just a moment. We'll talk more with Chris Swift about our livestock trade this morning. Lots to chew on there, and we'll do that when we come back. Let's review our live cattle trade and see how they're doing right now. Remember, we had that cattle on feed report that came out Friday. It was deemed as bearish, mainly for the feeders, but live cattle right now are trading higher, at least on the nearbys anyway. February up 12 cents. We're at 116.85 per hundredweight, and you have April gaining 55 cents at 123.07. Meanwhile, on the feeder cattle market, you currently have the March contract, which had closed $5 higher on Friday. In other words, limit up. Now we're down, but we're only down by 62 cents. We're at 143.52. So it sold off in the beginning today, and we have already bounced about $1.20 off of that. And now we're within a dime of our high of the day. We're still down about 60 cents, but it is coming back at this point. Now, on the lean hogs, you have the February contract 55 cents higher at 70.47. That's about 60 or 70 cents off of our earlier low this morning. We're within about 15 cents of our high of the day. April is up 35 cents. So as I mentioned, we had the cattle on feed report that came out Friday, and in case you missed it, the placements number was higher than expected. That was the key takeaway from that report. It came in at 101% of a year ago when the trade was looking for 97%. So let's go back to Chris Swift here. Chris, the fact that the placements number was that much higher, did that really amount to all that much pressure on the market after all?
Well, now that we can clearly see hindsight, it did not, because we've been able to recover most of the losses that we saw this morning. There is also the semi-annual inventory report that will be released this Friday. And so I think that the trade is looking pretty deep out into the future, because we see that they're more than willing to pay premium in the future that they're not willing to today. We've seen no evidence in the cash markets, either fat nor feeder, that this same kind of optimism is today is what we see into the future.
Okay, when you look at the trade in the hogs so far here today, here you have that market showing pretty consistent gains, 30 to 50 cents or so across the board. Do you think that this is something they can build on through the week?
Probably so. I have been wrong in the hogs before. I really thought hogs were going to go lower. They have since proven me wrong and gone higher. And we note that the Philippines are in dire need for pork, and whether they're going to buy some from the U.S. or not, we're not as sure. But what we do know is that you've still got some pork deficits around the world, and the U.S., having the amount of pork production it does, still can step up and be the exporter for that.
Okay, well, thank you, Chris. Chris Swift of Swift Trading Incorporated, based in Nashville. Janet, back to you.
All right.